What's up, everybody? Welcome back to Earn It, Save It, Invest It. In this video, I'm going to quickly give you 6 stocks you should be watching and possibly buying in December and holding on for obviously long term. So this is going to be a quick video, but this will be going over and comparing the 6 stocks that you should be looking and buying in December. So if you do like my stuff, please give a like and subscribe. I really appreciate it. And so let's get into these December stocks that you should be looking to buy. Now, we are going to go over them, all of them at the same time. We have Adobe, Amazon, Hims, Meta, Celsius, and AMD. I believe all 6 of these are buys for December. Now, they are all pretty big, pretty big companies, right? We have 133 billion, then we have 2.5 trillion, we have 8.6 billion, then we have 1.5 trillion, 9.7 billion, and then 350 billion. So obviously Celsius and Hims are the lowest market cap, which makes them in a way, could be your biggest gains through those 2 companies. But let's just quickly go over their last month. Their performances have been absolutely atrocious. Amazon's the only one that's come up positive. Everyone else is negative. Adobe, almost 10% negative. Meta, 15%. AMD, 19%. Hims, 25%. And Celsius, negative 36%. When stocks are going down like that, that's the time to buy, right? You want to be like, if someone said, hey, today or this week, strawberries are on sale. And you're like, I have kids, and so they love strawberries. It's like, yeah, I'll go to the supermarket. I'll go and get them this week, right? I might even get a little bit more than I would usually, and then maybe freeze them or do it, right? So that's what it is. So when things are going down like this is actually the time that you should be looking to buy. So obviously their performances have not been good over the last month. So now would be a time to start looking into buying these companies. This is just a bunch of numbers. This is what they've been trading at. I'm not going to really go over it. Like, we have the 1 month return, right? We have the 3 month, 6 month, then we have the year to date. Now, the year to date return, Adobe's the one that's the worst, right? It's negative 28%. So again, this is one that's just been bad throughout the year. So I would say you could look into getting Adobe because it has been pretty bad. Amazon up just under 5%. Hims, as bad as it is, down 23% over the last month, down 32% over 6 months. Over the year, it's up 53%. Same with Meta, down 15% over 3 months, but yet year to date, almost 9%. Celsius, 32% negative over the last 3 months, but yet year to date, 53%, right? Very much like Hims. And then AMD, it's down 18% for the month, but then 3 months, 26%, and then it just keeps going up, right, until it hits year to date. So AMD has been performing actually pretty well. So this is even more so, right? Look at all these numbers. These are all really good numbers. They're all positive. This is the only negative, and this is right now. So why not buy right now? Dividends, Meta's the only one that gives a dividend. It's a small dividend, so you don't need to worry about all that. Valuation, we have the PE non-GAAP, and then we'll go PE GAAP actually, because Hims and Celsius, they actually don't have a non-GAAP PE, so it's just a little bit more, right? We have 15 on the non-GAAP, and then we have 19. So it's a little bit more, but not too much. So we have 19 for Adobe, 32 for Amazon, 79 for Hims, 26 for Meta, 69 for Celsius, and 85 for AMD. Obviously, these are some pretty high PEs, but these companies are growing pretty fast as well. Adobe is not growing as fast, therefore it has a lower PE. And here we go, right? The revenue growth, just over 10%. Amazon is a little over 11%. Hims, 78%, right? So that's why this company the stock has been kind of going pretty good. Meta, 21%. Celsius, 55%. And AMD is at 31%, which is really good as well. So obviously, Hims, Celsius, and AMD take the cake on the revenue growth. Profitability, right? We have the gross profit margin, which you have almost at 90%, 50, 75, 82, 52, and 51. Now, gross is always good. But what's your net income margin, right? What's the actual net income margin? So you have 30%, 11, 6, 30, 3, and 10. So Meta and Adobe take the cake, and that's because they're more software companies. They don't deal with actual products, where Amazon is products, HIMS is products, Celsius is products, AMD products, right? They actually have physical objects and things to sell, where Adobe is selling software mainly. Meta is selling advertisements and stuff like that, right? They do obviously have the Ray-Bans and stuff like that, but mostly it's software or just non-physical products. The ownership, as you can see, insider shares, the insider percent is basically how much of the people that work for the company and inside the company, how much of that company do they have. Amazon is actually fairly surprising at a 9%. And then we have 9%, actually 13% for Meta. That's actually a lot, considering AMD is only at 0.55, right? Celsius is at 10. So Meta has more insider in percentage wise. So that's, a lot of those people still own, the big dogs in Meta, and plus they give out a lot of stock compensation. So, the insiders have a lot of sway on that stock price in a way. Again, here's their performances all over again. We don't need to go over that again. We can go over their income statement. Again, their revenues. Now, we looked at percentage-wise, right? We looked at, okay, how much are they going up percentage-wise? But if I said this person went up 100% and this person went up 10%, you would think maybe the person that went up 100% made more money. But what if the person that went up 10% had $11 and the person that went up 100% had $1? Now, obviously, if you do the math, the one that has $11 going up 10% is $1.10 compared to $1, so that one is actually more. But if you do continue those growth rates at 100%, you'd be doing a lot, right? You'd be doing a lot better eventually. So that's what these, right? So Amazon and all, like let's look at how much money they make, right? They make almost $700 billion in a year. $700 billion in a year. They're almost making $1 trillion in a year in revenue, right? That is a lot. So just a sliver of that pie of being their net income, and that is a lot of money. So just keep that in mind. So the revenue is $23 billion for Adobe, almost $700 billion for Amazon, $2.2 billion for HIMS, almost $190 for Meta, $190 billion, $2 billion for Celsius, and AMD's at $32 billion. So as we can see, HIMS and Celsius are at the low range. Now, that is also why I think over the next 5 years or so, HIMS and Celsius could be really big dogs, because all they have to grow is to a $10 billion company, and they've grown so that's fivefold, right, from where they are today. So I do believe that these companies will be growing to about those levels at market cap over the next 5 to 10 years. So I'm okay with it. Net income available to common shareholders. So Adobe, right? You have your revenue and everything, but then you have your expenses and everything. So at the end of it, how much is your income, right? How much are you making? So they have about $7 billion. Amazon has about $76 billion. HIMS $133 million. Meta is at $58 billion. Celsius at $31 million. And AMD at $3 billion. So again, Celsius and HIMS, their growth rates are great, but they're making so little, right? So that's where it comes to someone who has $11 compared to $1, except this is more like someone who has $11 and someone who has 10 cents, right? Now, if you're making 100% on the 10 cents, that's great. Eventually, you will be able to reach, that the other person that had $11 and now they have 12 and now they have 13 and now they have 4, right, 15. Eventually your 10 cents will catch up to them. If you keep growing at 100%, it's just going to take a lot longer. This is not to say HIMS and Celsius will be Amazon or Meta or anything. It takes a while. It takes a while to get there. As long as those growth rates continue to go, then that business will continue to, grow really fast. But nonetheless, these companies like Amazon, I mean, they make so much money. But think about it too. You make 700 billion and you're making only 76 billion, whereas in Meta makes their revenue is 189 billion and they're making just under 60 billion. So I mean, that is a pretty big difference, right? They're making, let's say 4 times, about 4 times less than Amazon in revenue, but they're making, just about, I don't know, 15 to 20% less in profits. So, that's just a thing to consider. The balance sheet, the total cash, we have Adobe at about 6 billion, basically. Amazon at 94 billion. Hims at 629 million. Meta at 44 billion. Celsius at 805 million. And AMD at 7 billion. So again, big dogs, Amazon and Meta, will always be taking the cake on this kind of stuff. They have a lot of cash, but they also have a lot of debt. So when we're actually looking at how much cash they have, now obviously they have other assets and other stuff, right? But if we just look at straight cash compared to the debt, it's nice to see, you'd like to see more cash than debt if possible, but as close to that as you can. Now here, right, we're at about $6 billion in cash and about $6 billion in debt. So it's not that big of a difference. That I do like to see. Whereas in here you have 94 billion and 160 billion in debt, but again, this is good debt, high quality debt for Amazon. Hims 629 in total cash and 1.12 billion in debt. Meta's at 44 billion in cash and 51 billion in debt. Celsius 185 million in cash, 894 million in debt. AMD is the only one that's plus. They have $7.24 billion in cash and they only have $3.87 billion in debt. So they could pay off all of their debt in cash and still have another 3.4 billion. Basically, that's pretty good. So AMD in this sense is doing the best. But again, obviously, Amazon and Meta have so much more cash technically. But AMD, in terms of the percentage-wise of cash to the debt, is doing a lot better. And then we have the cash flow, net operating cash flow, right? We have 9.7 billion for Adobe, 130 billion for Amazon, 325 million for Hims, 107 billion for Meta, 554 for Celsius, and then 554 million for Celsius, and then 6.41 billion for AMD. The CapEx, right? How much they are spending? Adobe is spending 193 million. Amazon spending 120 billion. Hims is 191 million. Meta is at 62 billion. Celsius is at 30 million, and AMD at 960 million. Now, one thing I do want to show you is that Hims is their CapEx is at 191 million, right? That's a lot. They are really putting a lot into the company, right? From making purchases, buying other companies, like they did. What was it? Zara. I forgot the exact name, but it's for overseas, right? International. So Hims has been doing a lot of spending. They've been doing almost as much spending. If you see, they are doing as much spending as Adobe, right? But when we look at the market cap, right, valuation, right? Oh, where is it? Right here. The market cap's at 133 billion for Adobe, and Hims is at 8 billion. Adobe is worth 10, 15 times more, a little bit more, about 17 times more than Adobe. Or no, sorry, Adobe is worth 17 times more than Hims. And yet Hims has the same capital expenditures as Adobe. So HIMS, hopefully it all pays off. And if it does pay off, which I think it will, it's going to do them a great service, right? So HIMS right now, that is something that's going against them is their CapEx. Obviously, they're spending a lot, but I think it's going to do well. So I'm going to go over really quick just some of these stocks. So this is a Palantir chart. You don't have to pay attention to that thing. I feel like it's going to crash eventually. Here, let's go. What was Adobe first, right? So let's just go over last year to date. The year to date is an awful chart. This thing has just completely gone off the rails. Percentage wise, it's down almost, about 25% for year to date. Now, if we actually look at the peak of Adobe, right? When we look at Adobe, it was doing so well. COVID, obviously, it crashed, everything happened. Then it was boosting up like everyone else did. Then it had that kind of little bit of a hangover, kept going up, and then boom, 2022 hit, and everything just went down, right? Okay. So then it went down all the way to 277. Then it started to continue to go up, right? Okay, now everything is back. All the other stocks started to come back. Now it went back up, boom, boom, boom. Hit 636. Didn't even top out. It hasn't hit an all-time high. The all-time high is still November of 2021. Didn't even hit an all-time high. And then since then, it has not even been able to find this high. The 630, the high of 2024, hasn't even been able. So in the last 4 years, this thing has done nothing but go down, essentially. If you've held this stock for the last 4 years, it's done absolutely nothing for you. Well, okay, if you bought it at this time, right? But over the last 4 years, this stock has done nothing for you, unless you've actually sold. If you sold here and you took some tax loss harvesting, or you sold up here and you took some profits, that's the only way it did anything for you. Otherwise, it has literally just lost you money. In terms of, on paper. But I don't believe, look, they beat every time. And it's not like crazy, they're beating by 2-3%, right? But they're always beating. They're always going to beat. And yet their stock continues to go down. They're continuing to make profits and, grow the company. So, and when you look at the history of this company, it's kind of gone up pretty much most of the time, right? Now we had, the great financial crisis, boom, and it went, and then we had the .com, right? This is definitely a .com, right? It dropped down, used to be at 42 something, and then it went all the way down to 8, right? And then it came back up, and then let me see here, 5 year. Right, look at this. Adobe went all the way up, boom, and then it just passed it over there, right, for the great financial crisis, and then it came down. So, you could look at Adobe as if you had bought over here in the .com, you didn't make money until 13 years later. 13 years. It took you to actually walk away with money, all right, and now you actually started making money. When you look at Adobe now, you're looking back, and we're looking at 5 years ago, and if you had bought over here, anytime, you've lost money. You haven't made any money. So that's pretty incredible. This is one of the stocks that I'm looking at like, wow, this thing could definitely be bouncing back up. Because Adobe, I use Adobe. I use Adobe for everything. I'm a video editor at Fox Sports. Content creators are always using Adobe, from Photoshop and Premiere. It has a wide range of uses and assets and stuff. So their business model, they have a lot of companies and businesses that are just secured and integrated to their system. So Adobe to me does not seem like it's going to go anywhere. It's going to continue to grow. And yeah, so I look at this chart and I say, usually if there's a company that's really good, it's growing, and it has a really good footprint on that industry, and especially if I'm looking at 5 years ago and I'm getting that same price, that seems pretty good, right? It's very similar to a Nike. When you look at a Nike, this, you can get it from a price of 10 years ago. That's insane. A decade ago. I think I'm going to have to buy more Nike. Look at that. 10 years ago. 7 years ago. you could have bought this at that price. That's insane. I mean, since its peak, I should have added Nike, huh? Should have added Nike. It's just I have so much of it in my account right now, but I should have added Nike on this. I'll do a whole video on Nike. But it was at 176, and since then it's gone 64% down over the last almost 1,500 days. Just pure down. I mean, at least Adobe had an M, right? Ooh, that's not. Adobe was like an M. Adobe has gone down since its peak 53%, so even less, right? Even less than Nike. Nike has gone down 64%. So Nike's even in somewhat of a very similar position. You look back and you're like, oh my gosh, this company has been such a winner for so long. Very rarely am I going to look back and say, oh, 10 years ago, if I had bought, I'm not making money. Very rarely that happens. And when that does happen, usually you see a big boost after that. So that's just what I'm saying. Like right here, right? Here's a classic example. Saw this right here from far, right here. Right, you have 09, right? We fall down, we drop here, where you could have bought over here in 04, and you literally could have bought basically at that same price for at the .com. Right? You got over here at the .com. Look at that. Right? A full 10 years ago. And then what happened after that? That was, the price was $11. You know, now it's 63. You can see, I mean, that's not even that much, that's not even great compounding interest, going from 11 to 63 over 15 years, right? That's not the best, but it's also gone down so much. So this is also in the very similar thing. Now I'm going to go over the other ones really quickly because I went really into Adobe. And I went into Adobe mostly because it's like a catching falling knife. Like I said, it's one of those that's on discount. It's whatever grocery store you go to, whatever product you like the most, when someone's going to put that on a discount, it doesn't even have to be the product you like the most. It's just something you know you're going to use. It's worth it. You know, a fruit that maybe, hey, I might want to try. You know what? I've never tried these fruits, but I know they're really delicious. They're good for you, and they're on sale. I mean, I'm going to give it a try, right? You could try Adobe if you don't have it. Try it out and see what happens because it looks like it's on a really good discount right now. So that's just my 2 cents on Adobe. Amazon, it's just always a buy. It went through this like little crash right there, right? Not even a crash, but it's gone through a little correction along with the market. Now, I wonder if we are going to absolutely just bounce back, or if maybe for the next, this week for Thanksgiving, we kind of, the big wigs and everything are on vacation. Maybe we kind of have a little bit of a rally, and then we push back down for the beginning of December, and then we push back up for the Santa Claus rally. That's what I think might happen. But again, Amazon's always a buy. You could buy down here, you could buy up here. Basically, it's always a buy if you're going to hold it for a long time. Let's go Hims. Hims is, I'm all over the place. I got all kinds of charts. I've been charting Hims. Now, I did say, here's a big bounce, right? Here's the top. Here's the top over here at 34, and look at what we did. We bounced right off there. This is the time to buy Hims. This is not a joke. I guess none of this has been a joke, but if you are planning to buy into the healthcare industry, Hims is a really good introduction to that, as well as it's a good time right now. It's a very good time, very good price. I don't think it can go very much lower from here. And I think over the next 6 months, this thing could double. I think this thing could double over the next 6 months to a year. But I think over the next 6 months, because it just has that kind of momentum going for it, the way that this stock moves, I think over the next 6 months, it could double. But this is one of those stocks where you look at it and it's just been beaten down, right? Unlike Amazon, where not really, right? Meta, it's been beaten down a little bit, actually. Meta's actually really has been beaten down. Since its high of August, It's down 20%. It was down 25%, but now it's down 20% since its high in August, right? It couldn't even reach that high over here in September, and then it came back up a little, but I mean, like, it just couldn't even find a new high, and it just keeps dropping. So it's possible this thing drops again, but Meta, really high quality company at a discounted rate. Why not buy it? It makes sense to, to do that. Celsius, a company that's growing really well, has great potential. What missed its earnings? 100. Oh, that's because the earnings per share. They have all kinds of stuff going on with the Pepsi deal and the Alani deal. There's all kinds of stuff going on with the inventory. So it makes things look a lot worse. But nonetheless, they are growing at a very good rate, and they just bought Rockstar. So I think this company is going to go back up to these highs. But again, you're looking at this at a discounted rate. I literally bought this at right here around 25 or something. I bought some right around here, and I feel so good about it. I feel so good. I'd feel good about buying it at 40, but I feel so good at buying it at 25. But anyway, it's dropped down. Another one, highly, highly discounted stock. Last but not least, AMD, which has gone up very, very much, kind of to the moon a little bit since it's bottoming. I mean, it bottomed over here with everyone else in April, and now it's at 160% since then, but it was up 232%. Yeah, I mean, you just look at this, it's just done such a good move. You look at this, you're like, oh, wait, what? But you look at this, it's like, okay, it's better. AMD is not much of a discounted stock, but at the 200 price, it might be worth, just buying into it, because the last time it was at this price was last year, in March 2024, right? So when we look at the actual chart of it, it's reaching spots that it was reaching, about a year ago, whereas in something like an Amazon March 2024, right, it was down here. It's well above those marks, right? Meta, March 2024, right? Well above those marks. So AMD, once again, NVIDIA, right? NVIDIA is actually more of a, right? March 20, I mean, look at where NVIDIA was. It was way down here. It has gone up so much more. So AMD is still playing catch up to itself, right? It's still playing catch up to itself, where it's now its current price is not past its previous all-time high. Now we have an all-time high of 264, but it did hit a all-time high of around 213 or something. I mean, it kind of almost hit 226, whatever, but yeah. So that's that. Those are the six stocks I think you should be buying in December, or at least looking at. Please give a like and subscribe for this channel. It really helps. I really appreciate anybody who's watching right now. We're almost 30 minutes deep, and I did not think it was going to be that much. It always ends up being more than what I think, but those are the six stocks I think you should be buying. Looking at the charts, looking at the numbers, they're growing, they're profitable, and the stocks, most of them are at a discount right now. So yeah, thank you for watching. Please hit the like and subscribe button, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.